Good morning and welcome to EuroScope Finance. Here's your complete midweek market briefing for Wednesday, November 12th. All eyes are on how the ongoing U.S. government shutdown is reshaping the global economic outlook, and we've got a lot to unpack. Stay with us as we break down what this means for you and your investments. First up, let's look at today's key focus events. The trading calendar is absolutely packed, but there's a huge cloud of uncertainty hanging over it because of the U.S. government shutdown. The release of several major American economic reports, like retail sales and industrial production, is likely to be delayed. This is a big deal because it leaves traders flying blind without the usual data points to guide their decisions, which is why everyone is on edge. Over in Europe, the data flow is still strong. Early this morning, we got Germany's consumer price index and wholesale price index. These are crucial inflation metrics that the European Central Bank will be watching very closely. Following that, we'll see Italy's industrial production numbers, giving us a better picture of manufacturing health in the Eurozone. But it's not just about the data today. We have a series of important speeches from key figures at both the European Central Bank and the Bank of England. Investors will be hanging on every word, searching for clues about upcoming monetary policy directions. Are more rate hikes coming? Is a pause on the horizon? These speeches could give us the answers. Later in the U.S. session, we do have some data trickling in. We'll get updates on mortgage applications, which tell us about the housing market's health and building permits from Canada. We're also scheduled to hear remarks from several members of the U.S. Federal Reserve throughout the day. Their commentary will be even more important now, given the lack of hard data from government agencies. And of course, the political drama in Washington continues. All of this market activity happens before a scheduled House vote on the Senate's budget amendments late in the day. The outcome of that vote could either resolve the shutdown or prolong it, sending ripples through every asset class. Now, let's turn to the bond market, which is always a critical indicator of investor sentiment. In Europe, Germany is set to auction 21-year and 31-year securities this morning. The demand for these long-term bonds will show us how confident investors are in the long-term stability of the Eurozone. Later tonight, the United States plans a massive 10-year note auction worth $42 billion. The results of this auction will be a major test for the U.S. bond market and will heavily influence global interest rates. So, to recap the key events, the U.S. data vacuum is forcing markets to rely on central bank speeches and political headlines. European data, especially German inflation, is in the spotlight, and major bond auctions in both Germany and the U.S. will test market appetite for government debts. Now let's take a step back and look at the broader global market overview. Across the globe, market sentiment remains overwhelmingly cautious. With U.S. government agencies like the Bureau of Labor Statistics and the Census Bureau unable to publish some key reports, investors are scrambling for direction. They're turning their attention to central bank commentary and geopolitical headlines, which are now the primary drivers of market movement. Trading in Asia was mostly subdued overnight, reflecting this wait-and-see attitude. However, we did get some interesting comments from central bankers that added a layer of uncertainty. For instance, several Federal Reserve officials hinted that the Fed could start a gradual expansion of its balance sheet in the near future. This is a form of quantitative easing, and the suggestion alone provided some slight support to U.S. bonds early in the session. Meanwhile, in Japan, officials expressed growing concern about currency volatility as the yen approached a key psychological level against the dollar. Any sharp moves in the yen can have significant impacts on Japanese exporters and the wider Asian market. So traders are watching this very closely. And down in Australia, policymakers are openly debating whether their current interest rates are becoming too restrictive for the economy. This discussion weighed slightly on the Australian dollar, showing how sensitive currencies are to central bank rhetoric right now. The main takeaway here is that without the usual flow of reliable U.S. economic data, the market is becoming much more reactive to whispers and hints from central bankers. This creates a more volatile and less predictable trading environment. Let's dive deeper into the European session preview. Here in Europe, the undisputed spotlight will be on Germany's inflation data. The final CPI numbers could be a major catalyst for the European Central Bank's next policy decision. Recent comments from various ECB members have highlighted a growing split within the governing council. Some officials, the hawks, see the need for tighter policy to stamp out any remaining inflation. On the other side, the doves are more cautious, pointing to the ongoing disinflation trend and the risks of over-tightening in a fragile economic environment. Today's German inflation print could tip the balance in favor of one of these camps. Later this morning, as we mentioned, Germany's Bund auctions will provide another key test. These auctions will gauge investor appetite for long-term European bonds, especially amid speculation that the ECB might need to consider easing measures perhaps as far out as mid-2026 if the economy slows down significantly. Strong demand would suggest confidence, while weak demand could signal rising concerns about the Eurozone's future. Overall, the European session is expected to remain We're anticipating moderate trading activity as most market participants are holding back, waiting for more clarity from the U.S. fiscal situation. Any unexpected news, whether from the ECB or from Washington, could cause sharp, sudden moves. As we look ahead to the American trading hours, the U.S. session preview is all about one thing: the Fed. With the absence of official government data, commentary from Federal Reserve officials will absolutely take center stage. We have multiple Fed speakers scheduled throughout the session, and their tone, whether hawkish or dovish, will likely guide market expectations for upcoming monetary moves. Traders will be dissecting every word for hints about the timeline for rate cuts, the outlook on inflation, and the Fed's view on the economic impact of the government shutdown. The bond market will also stay in sharp focus. The 10-year Treasury auction, scheduled for later today, is a critical event. The yield on the 10-year note is a benchmark for borrowing costs around the world, from mortgages to corporate loans. The outcome of this auction is expected to heavily influence yields heading into the U.S. market, close, and set the tone for the rest of the week. A strong auction might see yields fall, easing financial conditions, while a weak one could send yields higher, tightening them. Given the thin trading conditions and the limited data flow, we have to be prepared for heightened volatility. Market reactions could be sharp and exaggerated in response to any new policy headlines or unexpected political developments from Washington. In this environment, rumors can move markets just as much as facts, so it's a time for caution. So, to summarize everything for you, with the U.S. government still at a standstill, global markets are navigating a sea of uncertainty. Trading is cautious, and direction is being dictated almost entirely by central bank signals and political headlines rather than fundamental economic data. In Europe, German inflation and bond auctions are the key events to watch. In the US, it's all about what Fed officials have to say in the outcome of the major 10-year Treasury auction. It's a complex and fast-moving picture, but we're here to help you make sense of it all. Stay tuned to EuroScope Finance for your next update on how these crucial developments are shaping the global trading outlook. We'll continue to monitor the situation in Washington and bring you the latest analysis as it happens. Thanks for watching today's briefing. If you found this update helpful, please don't forget to like, share, and subscribe for more concise financial updates from Europe and beyond. We'll see you next time.